Hello and good evening everyone, this is George from GettingMarketMoney.com. Tonight we are going to do a abbreviated version of Currency Corner and a recap on the USD Japanese yen pair. Now today nothing spectacular happened, it's just a continuation, and the US dollar has dropped in value against all currencies, which in fact is not to say spectacular. It doesn't happen often, however it has dropped against every pair and it's dropped materially. So it was an interesting day, and it was a great day to be short the US dollar along the Japanese yen. As mentioned in yesterday's edition of Currency Corner, I indicated a trade. It's a great opportunity to get in. So what you're looking at right now is USD Japanese yen weekly. As you can see, it's in a clear and defined downtrend. What I always do is I start with a weekly time frame for any chart, just so you get into the mentality and don't tend to go against the trend. It's very important that you go in the direction of the trend and don't try to go against the grain or swim upstream, whatever tired cliche you want to insert there. So going on the daily chart, you could see this spike here occurred because of the Bank of Japan intervention, selling off the yen on the open market. It is currency manipulation in the first order, and it is not a good look. However, they rallied it. Myself, I actually shorted at the top there. I did not announce that publicly because it was quite a risky position at the time. But as you can see, I called a short yesterday after this candle here opened up high, rallied, and then created a big wick, as we can see here, above and beyond the 61.8 retracement level to this Fibonacci I have mapped here. So when that happened and it closed below, this was a bearish indicator. It was below EMAs, it was below the middle point of all stochastics. It was a sell indicator by any means, and on top of it all, as you can see, after a massive sell-off in the yen, investors have come into the market and saw that as a better buying opportunity rather than take fear from the Bank of Japan. That being said, there is a real and possible threat of further intervention. It would be silly of the bank to do it only once, as for them it loses credibility in their eyes. So sorry, let me just shift there so you can see the price here. So I don't think they'll do that. I think they'll go ahead and do another sell-off of yen if it breaches the 83 level, which could be during the day. So yesterday we placed this sell as indicated by the green line. The red line is a stop loss, and we made quite a few pips. It is now at the point where I feel uncomfortable saying that it will be further short, but we could see downside to 83.00, which would be down here. And at that point, honestly, I don't advise anyone stay in this trend. See how it reacts at this level. It is a resistance at this point. If it breaks through, it will do so in a large move, so you might want to put a limit order to sell if you're with Oanda, that is. You want to get into this on the short side at 82.90 or so. Never go on the even numbers. It's asking to lose money. Always play it a pip above or down to the downside. Always leave a little bit margin of error. I'd say 82.90 would be a good short on the break. If not, I'd actually buy that resistance level and ride it back into the range, because effectively I feel at a 15-year low you're going to see a range or some consolidation along these lines here for the next couple weeks as the market takes a breather, unwinds their profits, or realizes their profits, that is, and wrestles with the Bank of Japan to see where we go from here. So I just want to show you some very real profits were materialized here, $872. This is in the span of 2 days, so I just want to show you guys here. This is an account that I trade for the sole purpose of Currency Corner. Whatever I say here is what happens on the actual account. Therefore, we have some sort of measure of our performance. Tomorrow, for Thursday, is, as usual, as every Thursday, unemployment claims out of the U.S. They're expected to come out at 458. I believe if they're lower, it'll be good for the US dollar, so the euro will be going down, and the euro does need to come down a bit, so especially if they're better, the market will look to buy into that and create a strength, a rally to support. Right, recently we haven't had much to the upside of the U.S. dollar, and we all know that once everyone jumps to one side of the canoe, it tips, and it's about to tip now, and we're gonna get some profit taking and a drop in the euro and all other pairs, and a rally in the U.S. dollar for the short term. This is my expectation. Tomorrow also at 8:30 a.m. we see gross domestic product month to month released from Canada, forecast to be negative 0.1. GDP is an extremely backward looking number. I don't think anyone should really care about this number unless it deviates to a massive extent. Fed Chairman Bernanke is going to speak again tomorrow. He does so very often, and we'll look for indication of further monetary easing the policy and some additional liquidity to support the markets, as he's already indicated. So that's the order for tomorrow. We'll see what the market serves us and what actually ends up taking place. As I mentioned, it might be time to lock in some of those profits. It'd be extremely wise to lock in some of this profit. In fact, I'm going to lock some of this profit right now. So I'm going to buy back half a unit. And there's a stop loss, which there should not be. Sorry about that. Hedge is prohibited, that's right. And this is actually a demo account, I must add. On the live account, I'm not going to actually showcase that to the public. So hedging is prohibited on my demo account. So there you go, I can't hedge, I have to close a position, enter half, because the contingent order of the CFTC. So thank you very much for that, CFTC. Another great great market saver there. Which is fine. I'm just going to go ahead and close the position as soon as I'm done the recording. So this is today's edition of Currency Corner. For tomorrow, keep your balances safe. If you have profits, lock some of those in. It's silly to let the market eat away at your profit once you've realized it. It's a much better play, especially for the short term, to finish off the week. So that's the agenda. Go ahead and fulfill it. Have yourselves a great trading day, and we'll see you soon. This is George from GettingMarketMoney.com. Do not hesitate to contact me. Have a great day. Take care of yourselves. Bye-bye.